If you weren't already convinced that retail's doing a lot better than we thought it was just a month ago, look at the quarter from PVH, the apparel company best known for its two major brands, Calvin Klein and Tommy Hilfiger. Now, PVH had already made a pretty stunning rebound, with its stock up nearly 70% from the January lows, as the company has been able to really start executing this year after spending some time in the wilderness. And after the close today, PVH reported a strong 18-cent earnings beat off a $1.29 basis. Revenues came in a tiny bit late, 4% year over year. Calvin Klein was up 11, North America, and 13% internationally. Tommy Hilfiger grew at 3% in North America, sprawling international biz, but 10%. And these numbers are even better if you look at them on a constant currency basis, because big currency hit here. Plus, management gave a bullish forecast for the next quarter, raised their full-year earnings guidance. That's what always matters. Not too shabby. Remember, the stock has had a huge run off its bottom, so don't expect it to explode up, because it's been exploding. Let's check in with Vinny Chirico. He's the chairman and CEO of PVH. Find out more about the quarter and his company's prospects. Mr. Chirico, welcome back to Mad Money. Good to see you, Manny.
Jim, nice to see you.
Sometimes I think your stock leads everything, because you were here when everyone was doom and gloom, and you were saying, look, you think that inventories are getting leaner, that things could be better, and it really played out exactly the way you said.
Particularly as you described in North America, inventory is getting under control. Really is, I think, the story really has been a profitability model, and I think that story continues as we go into the third and fourth quarter here in North America.
So that if inventory is under control, then I have to believe that that kind of builds in a pretty good back-to-school season.
We're optimistic about it. We're being cautious on the top line, but pretty aggressive on the gross margin and bottom line. I think, given our guidance, I'd like to think that we're being very prudent about how we're really projecting the second half of the year. But if trends continue, there actually could be some more upside against the numbers we put out there.
Well, let's talk about that, because there's a little confusion on the absolute channel. I mean, look, it's no secret that you do big business with Macy's. You do big business with every department store. If they're closing 100 stores and they're scaling back, and it cannot necessarily. I mean, it has to constrain your growth, doesn't it?
Well, look, with Calvin and Tommy, we're seeing pretty significant growth with Macy's and our department store customers. The tough part of the business for us in North America is our own retail stores in tourist destination locations.
But how many do you have in Florida and New York and in?
We have very big stores that we may have, that represents the chain's volume somewhere in that 35% range. So we're talking about big stores that do big volumes that are still very profitable, just like Macy's Herald Square store. It's the most profitable department store in the world. But I think they're being impacted to a degree by international tourists in New York.
Right. Now, you still have a lot of countries that have weaker currencies. Now, we can't just look at the euro and say, hey, that's no longer an excuse, right? Your basket's not good versus the dollar.
That's correct. And I think that balances, and as we turn into the second half, particularly into the fourth quarter and go into next year, from currencies being a headwind for the last 24 months, I think we could actually see currencies be a bit of a tailwind if they stay at these current levels. I'm talking about the Canadian dollar, the Brazilian real, but also the euro relative to where it was this time last year. It's up a few pennies, and the prospects in Europe are very strong.
Do I have to worry about Tommy Hilfiger at the margin?
No, Tommy Hilfiger business was up 11%.
Right. I mean,
constant currency earnings are up 20%. Right. Very strong. The U.S. business under more pressure, particularly in the U.S. side of it.
But is that again the dollar?
I think it's the big piece of it is the international tourist. But if you look at the European business, comps were up internationally 8% in the Tommy business. Right. So very, very strong. Our order book in Tommy in Europe, fall was up 6%, which is really strong on a big business, and spring looks to be up 7%. So that business just going to be very strong for us. We're
starting to hear that fashion's back. We're starting to hear that it's a less promotional environment. What would that mean for your fashion-forward clothes, and what does it mean to be not promotional for your margins?
Well, I think, look, let's simplify it. In North America, last year's end of third quarter, beginning of fourth quarter, I don't know how else to say, it was a disaster. Right. I mean, you could talk about weather, we could talk about weather.
You came in and you said it.
And I think basically inventories are being bought tight. Department stores are open to buy dollars are really being under control. We came out of the quarter with inventories flat, with sales increases planned for the balance of the year. You know, when you spoke about some of the retailers, Macy's, Nordstrom's, their inventory is clearly under control. The big opportunity for everyone is to capture sales, but to really capture gross margin. Third quarter, but particularly in the fourth quarter, it was a bit of a bloodbath last year. So that comparison, I think, really plays well for us. And we've got North America planned pretty cautiously in our guidance.
Now, we're of the opinion that bricks and mortar is no longer in the doghouse. But you also got the relationship with Amazon. I mean, you want to just straddle both worlds?
Yeah, and I think it's, you have to go where the consumer is. Right. I don't think, stores are not going away. But last time I was on here, we spoke about the fact that there's too many stores in the United States. So Macy's, to their credit, stood up and said, we need to close 100 stores. It represents net to them only about $1 billion worth of sales. But, I think that'll put some top-line pressure, but clearly create bottom-line opportunity. Those were not our most profitable locations or theirs.
All right, let me ask you, because you're a straight shooter. I saw the tweet about Speedo. Just have to switch directions on this lock team matter. You decided to donate the money that would have been, for the sponsorship. Tough decision, obviously, but you have to make it, right?
But it wasn't so tough. It was unfortunate, is the way I would describe it. I said, look, we can't condone that kind of behavior. Our brand values, what we stand for as a company and as a brand is too important to us, and our consumers look to us. So Ryan's been a terrific athlete. He made a mistake, but it was a mistake that a 32-year-old man shouldn't be making. Okay. So we had an action that spoke to it, and we tried to mitigate that action by making the charitable donation to support children in Brazil.
That's great. And that saved the children that he gave to. One last question. You talked about the tough times at Macy's. Anybody really a star? So Penny a little better, Nordstrom better?
Well, look, I think department stores are going to continue to outperform expectations. I think inventories are a key across the board, and I think you've heard everyone come on and speak to you. I don't have to speak for Macy's, Nordstrom, Kohl's, or Penny's. They've talked about businesses better. Yeah. We're not talking about, explosive comp growth, but we're talking about comp growth. I think that happens. Gross margin expansion's available to all of us. So that's what I'm excited.
A little like the old days. Maybe the stock gets back to where it was the old days.
We'd like to beat and raise.
I don't blame you. That's Manny Chirico, Chairman, CEO of PVH Corp, who told us when it was bad and is now telling us when it's good. He's right. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.